Good morning, good afternoon, and good evening. This is Maddy the Realtor here with Premier Sotheby's. On today's podcast, you are in for a treat. We're actually showcasing, or I'm showcasing, a local lender. Her name is Deanna Chosewood with Guaranteed Rate. She offers tremendous amount of wisdom and experience, and there will be timestamps below for you to be able to fast forward to whatever interests you. I mean, we talked about everything between interest rates, what's happening in the market, as well as hometown heroes, and also a little bit about the process behind the scenes. And I hope you enjoy. Thank you so much. Well, Ms. Deanna Chosewood, thank you so much for joining me today. This is Deanna Chosewood with Guaranteed Rate, and I really appreciate you taking out the time to be able to spend with the public here, our audience, to talk a little bit about everything. So I just wanted to start off and tell me a little bit about you. Tell me a little bit about your background and about what's been going on.
Well, thank you for having me here
Yeah.
today. I appreciate you inviting me to come on here. A little bit about me. I have been in finance for 13 years now.
Well,
Started in the banking world and kind of just moved my way through. I would get bored and then want to learn something new. And then I made it to mortgages 7 years ago,
wow.
and I have not been bored yet.
That's
It
good.
definitely keeps you going on your toes. Nothing's ever the same.
Yeah.
So I really enjoy that part of it for sure. So yeah, I've been doing mortgages for 7 years. Love it.
Mm-hmm.
I have lived in Ocala my whole life. So native here, love the area. I've seen all the growth. It's definitely lots of it.
Yeah, for sure. And especially
Yeah.
the last 7 years was really, as far as the cycle of homes, we've definitely had an increase in a lot of people coming into the area.
Yeah,
So
definitely. And with the home pricing and the interest rates and the changing of how we have to look at lending and things like that, I can officially now say, I've been through a few different changes of the industry here.
that's true. Now, tell me a little bit because you were then around when interest rates were magical. So,
Yes.
and so a lot of people, that's probably when you had a big boom and what refis, a lot of people starting to refinance their properties and everything. What is it that you're looking at now? Like, what's your opinion right now of the market and of the rates? What are you seeing?
So rates are about mid sevens to mid eights, depending on programs and qualifications.
Hmm.
I got an update yesterday from after the Fed meeting, and it seems that they are being a little more standoffish of another rate hike. So probability is
Oof.
going down on that. They still have another meeting next month to talk about another hike, but they're seeming to slow down a little bit on it. So I'm hoping that maybe we won't.
Hmm.
My opinion is that we're not going to really see much of a change in the rates
Hmm.
until probably 2025. I think the end of next year we'll start to see it go down a little bit
Hmm.
more, and then I think 2025 we'll see some changes. I don't think that we're going to see what we saw with magical rates at all. Um, I historically, honestly, our rates aren't really that high. It's just the
True.
mix of all of it with the cost of the houses and the rates. That's
Right.
what's making everything so difficult right now. But I think maybe we'd get down to the fives.
Hmm. So, oh, I think I lost you. Hold on. Are you there? I lost you for a quick second. I don't hear you. No, sure it's not on my end.
Craziness.
Oh, okay. I just heard you again. All right. Now you're back.
Okay.
Okay, good, 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 good. So just had a little technical difficulty for a quick second there, but
It happens.
but but yeah, I know it's unexpected. But yeah, as far as it going, going back down because I have had a couple of people that are sort of on the edge right now saying we're gonna wait for rates to go back down. What's your opinion on that?
Honestly, my opinion is always if you can qualify to buy, buy because you can always refinance later.
Hmm.
Um, none of us have a magic ball. None of us know what's going to happen.
Hmm.
And the rent market is just as high as it would be for a mortgage. So even though, rates are higher, payments going to be higher, renting is still going to be on par with your mortgage payment.
Hmm. That's true.
So my opinion is always, if you can do it, buy a house, pay into your own self and your own investment versus paying for somebody else's.
So we might have some people that are just, tuning in for the first time or might be first time home buyers. A lot of times, the terms or the process is something that they don't know everything about, right? And that's my job. That's also your job as being part of a team when you're walking through a particular buyer situation. So when a person comes in and they are, initially wanting to see what can they qualify for, right? Like I know I get people that come in and it's like, we want to buy a house. It's like, well, are you pre-qualified yet, or do you have a pre-approval yet? And that's usually where, I'll send them to you to go ahead and start that process. So what does that look like? What are the expectations for a lender? What should a buyer have ahead of time so that it makes your job easier and it makes their job easier?
So, the most important things are going to be income and assets.
Hmm.
That's going to be the most important things that I want to see whenever working on an application and working on that initial pre approval,
Hmm.
because I want to make sure that I am pre approving them for an amount that they actually can afford. And it's not just, them going off of what they're telling me. Sometimes people underestimate their income, sometimes people overestimate their income. So I want to see all that documentation up front so that when
Hmm.
I give a pre approval letter, we know that they actually qualify for what they're out going shopping for.
Right. And I know I've worked with other lenders in the past that sometimes, a person thinks that they qualify for a lot more, that because they rattled off some numbers. But it's
Hmm.
not only the income, it's also what's going out, right? Um,
Yeah.
so I'm sure that sometimes you'll see that too when a person makes X amount of dollars, but they happen to have a higher, just higher on the expenses side. So,
Right. So we look at their, of course, when we do an application, we're going to pull their credit. So that's where we're going to pull that from. I'm usually they're going to have to send me or bring me their income and asset information.
hmm.
But yes, that is another big factor is making sure that they don't have too much going out compared to what do they have going in. And I can also look at with them, you know, maybe we can pay some things off to
Mm.
lower their debts and make sure that they can qualify. In some cases, on an installment loan, depending on the loan program we're going with, they can pay down the loan that they have 10 months or less payments left, and I can exclude that without paying it off too. So we
Hmm.
just have to get creative with everybody and seeing, everybody's going to be different. So when somebody comes in and they're
Yeah.
like, well, so and so told me they got this program and that's the best one, I always kind of break open with, well, you're going to have a completely different qualification process than that person because every single person is a different process. No mortgage
Hmm.
application is ever the same.
That's so true. That's true. Um, I have worked with people in the past that have said, well, I want to pay everything off. I want to pay everything off first before I even start the process. I mean, is that always a good thing for them to go about that, to paying everything off or?
Not always. Sometimes paying something off can hurt your credit score versus make
Mm,
it better. So I think that it's always better to talk to your mortgage lender first and do an application. Because why spend the money on paying things off if you really don't need to? You can reserve that money to invest into the home if it's not only for the closing, but after you move in, you're most likely going to want new things. So rather than spending all your assets up front, let's talk about it and see what actually would make a difference. If it's credit they're worried about and their
mhm.
scores, we can take a look and see, well, if you pay just this thing off, then it might increase your score to this. And I can look at that and go over that with every borrower individually.
Okay. So it really isn't a one size fits all sort of thing. I think that
Mhm.
that's important for people to know because as we all do, the human experience, we kind of take other people's experience on different things, and we think that it'll also apply to us. But yeah, that's why we say contact the professional first before we make any sort of financial decisions or any moves. Now, as far as some of the newer programs that are coming out as of late. I know that one was Hometown Heroes. There was that I say newer, but it's been around for a little bit now. They ran out of money, I heard. So there's been some positive news that I've heard about this. Can you speak a little bit on that particular program? What was it about?
Yeah. So they did run out of money, which was not surprising at all. It
Sure.
definitely was a great program for the right person. But as of Monday, November 6th, they're going to be getting additional funding. So that's exciting. That's going to
That's
help more people
awesome.
be able to get into homes. They do expect for that to be reserved very quickly.
Sure.
So
So
if
talk a
if
little bit
it's
about that. Who qualifies? What would be the target for the Hometown Heroes?
So some changes were made to that. So it used to be you had to be in certain criterias, but
Mm-hmm.
now it has to be that your job is based in Florida and you would qualify for it, a full-time employee that is based with a Florida-based company.
Really, Florida based, as
hmm
in, I mean, I know that firemen, teachers, medical professionals. Is that
As
right?
in anybody, as long as there is some sort of a Florida
Really?
branch. Yeah, and that has been into effect probably for maybe 6 months now. When they got their
Okay.
last, batch of funding, that's
Yeah.
when they made those changes that it could be
Interesting.
open to mhm.
And what is it that it really benefits? It's money towards your closing costs.
Yeah, so it is money towards your, cash to close, basically, yeah.
Okay.
So down payment and closing costs.
Mm-hmm.
A borrower, it gets a max of 5% of the, loan amount up to 35,000.
Mm-hmm.
Um, so depending on what the loan amount is will depend on what they get. The
Okay.
minimum amount that they will get is $10,000.
Mm-hmm.
Now that is a non-forgiven second mortgage that is placed on the home. So it is going towards the purchase of the house, but it is going to have to be paid back eventually. Borrowers are not required to make payments on it, but they can, if they choose to, pay it down. If they sell the house or refinance the house, it has to be paid at the time of settlement. And if they amortize out for their full 30 years, it's due at in 30 years.
So that's really excellent to know, because it's not 100% free money. I mean, it's great for a
Right.
person's situation if they don't have the funds initially, and but it's also important to know that that is a debt that will have to be incurred at the time of sale if they ever choose to sell. So it doesn't, even if wow, 30-year. So even if they stay in the house and
hmm
they sell it after the end of 30 years, that is still something
It
that's
still
it's a
has to be
lien on the
paid back.
property.
And that's why I say it's a great program for the right person
Mm,
because just because it's there doesn't mean that you need to use it.
mm,
Just because you have access to it, it's got to make sense and be for the right person. Because let's talk about somebody who's got, great credit. They've got the money to put a down payment. We've got where rates are right now. And then let's say in a couple of years, rates go down and they decide they want to refinance. Well, what happens if rates go down as well as property values? And now you have this other $10,000 and maybe you owe more than what the value is now
whoa,
and you can't refinance and you're stuck with that higher rate.
whoa.
So it's things that you have to think about, when you're talking to somebody about these down payment assistance programs to make sure that it is the right program to go. Because like I said, just because it's there, it's not free money. We need to talk
Mm,
about it and figure out, that it is the right way to go. And I've had people who, once I explained it to them, have been like, well, that doesn't make any sense. I'm going to go ahead and just use my assets that I have
right.
because I don't want this second mortgage sitting there that I have to pay back.
Okay. I think that's great to know the full picture, you know. It
Mhm.
does help those that need it, and that's what it's there
Yeah.
for. So obviously if they've run out of funds, then a lot of people that, that could be a
Yes.
make or break when you're talking about closing costs or any sort of assistance when it comes to that. So it's a
Exactly.
yeah, so that's but it's also good
And
for
to
people to
help people
understand.
achieve homeownership.
Right. Right. So tell me a little bit about that angle when you're talking to um right now the people that are seeking mortgages. Do you find that the percentage of, who are you working with? Who right now is your mostly your clientele? Is it, first time home buyers? I know that they've been affected directly when it comes to the rise in interest rates. Are you seeing people coming into the markets, more seasoned buyers, investors? What is that you're seeing right now?
Honestly, I'm still seeing a mix of people. I
Mm-hmm.
get it all. Second homes, lots of self-employed people, first time home buyers, people that are seasoned, people moving from out of state still.
Mm-hmm.
So I'm really seeing still just a big mix.
Mm-hmm.
Not as many investment properties. I haven't done very many of those lately, but a lot of second homes, people wanting to secure a house here in Florida when they're a few years away from retirement. And I have a vast variety of programs that I can help people with so that even in this market where the cost is so high for somebody buying a second home and an investment home, I have other options for them to look at. So that's been really helpful in those
Interesting.
cases.
Okay.
And for self employed borrowers, whether they're first time home buyers or not, I have quite a few programs to help them out too, where, when you're self employed, you write off as much as you can. So we may not be able to go with your traditional loan. I have other options to be able to steer them into. So, I've been seeing a lot of that. Lots more difficult buyers more than the easy, we're
Mm,
done here, cut and dry. We're going to get this done real quickly. There's
right.
a lot more extra into it. Income calculations have been a big factor. A lot of variable income, not just your straightforward income.
Mm,
Um, which is I find it weird, that you
mm.
start seeing, that changes in things. Um, but that's really what I've been seeing lately, and it's just structuring the loan and making sure you find the right program for them. And that's kind of what keeps you on your toes in this industry is
That's true.
that you're always trying to, you get different people and you're always trying to make things work.
Absolutely. And, as far as your role, when a person comes up and they're speaking to you and, you're the face at, of your company, that's the connection. That's important. And, this is why we're starting the
Mhm.
series with getting to know your lenders, because I think it's important for people to feel comfortable who it is that's on the other side of the line. Now, on the other thing that nobody really talks about is I work with them and then hand them off to the lender. Then the lender has a series of team. Do you have a team under you? I mean, you have your underwriters. You have those that, and if you don't mind explaining a little bit about what that word is for those that might not know, the decision's not necessarily yours to make when it comes to them qualifying for a loan.
Yeah, yeah, there's definitely there's a team. We all have a team, that's for sure.
Mm-hmm.
So I am the front end man. Like it's my job to make sure that I vet the borrower and I
Mm-hmm.
make sure that I structure the loan correctly and I go through the guidelines to make sure okay, this qualification is going to work.
Right.
From me, once we enter contract, I get the file all put together, I submit it into processing, and the loan goes to my processor. We have one processor that we work with. It's she's my right hand man.
Cool.
So
Yeah.
she works on the back end and collects documents for me and speaks to the title company, making sure getting documents from them, the insurance company, making sure policies bound.
Mm-hmm.
Once she collects the information that she needs to submit to underwriting, the underwriter who actually reviews all of the documents for approval
Mm-hmm.
and make sure that we have everything that we need to fit the guidelines for the loan that I have structured together.
Right.
And they'll review that. They may come back with additional conditions needed depending on the applicant. They may come back and have a rebuttal on things and things like that. But they are the person who makes sure that what we have abides by what the guidelines are for the specific loan that we're doing.
Excellent. Yeah. So it's something that to have competent people on the other side. And of course,
Hmm.
the start to finish, you know, we're talking usually 30 to 45 days. So it's like the clock starts to tick once everything's signed and you guys roll with it. So
Yeah.
it's an interesting process when you're talking about how many people are involved in getting a homeowner their dream, you know, and you guys are a pivotal point in that process. Now, as far as right now with guaranteed rate, what would you say is probably a unique offering that you guys have? There's a lot of wonderful lenders. I mean, I know that you and I, you know, we've seen each other at events, and there's a lot of other lenders
Yeah.
that are wonderful as well. And I think it's important to be able to highlight what might make your company different from others.
Okay. Yeah, so there are some great lenders out there. I'm friends with lots of them in our
Mm-hmm.
community. You know,
Sure.
we all have to work together. We see each other at places. So
Right.
yeah, definitely. Something that Guaranteed Rate has to offer is our same day mortgage. I think that's a great thing.
Mm.
And I know that the name might sound a little deceiving because technically we can't close a loan in the same day with
Right.
regulations. We have to close 7 days after we send initial disclosures. But what the same day mortgage is that depending on the qualifications of the loan, if it's picked up for that program, the processor is the underwriter.
Whoa.
So we can get a clear to close in as little as a couple days. My average turnaround time on a same day mortgage is closing in 11 days.
What?
Yes. So the processor collects the documents, they review those documents because they are the underwriter.
That's
And
crazy.
yep, they're doing all the work. So they're not going to come back with crazy, conditions on that aspect. So I love it
Wow.
when a file gets picked up on that. And then if they get picked up on the same day mortgage and get an appraisal waiver, oh,
Magic.
yes, yeah, we can
But
close in no time.
that's amazing. So what would be some of the qualifications for somebody to qualify for something like that?
So it's not going to be your difficult file. It's not going to be a self-employed borrower. It's going to be
Mm,
your standard loan.
okay.
It's going to be a conventional. We can do FHA and we can do VA.
Hmm.
They're going to have just standard income that is used. Not variable income typically.
Hmm. Like
Um,
W-2,
Credits.
you're saying
Yeah,
okay.
yeah. They're not going to have your 1099s or your self-employed income
Okay.
because that just has a little bit more of a risk evaluation with it. But yeah, and then credit score, you're usually going to look at probably a 680 or higher credit score.
Hmm.
And depending on where the area the home is in, depending on down payments, that kind of stuff, assets, the system does its whole evaluation
Yeah.
and it picks up on the files that would go through smoothly to be
That's
your
amazing.
yeah, your smooth files that isn't gonna there's no reason to hold it up for 30 days.
That's really cool. That's really great to know and to know that that's even out there. You know, you
Yeah.
turn of the year right now. I know that here we're coming to a close right in the fourth quarter, and there are maybe people out there that are actually looking to be able to get something quick and be able to close
Yes.
quick, right? I mean, right now
Yep.
we're November. You're kind of edging it close by the time you find a house and get a qualified contract on there and then get a lender and close because now you're
Yep.
talking Thanksgiving's rolling around, so offices are closed. Christmas rolls around, offices are closed. So, those are also days that people have to put into account that you don't have when it comes to
Yep.
people working in the banking sector. So, that's awesome. So, as far as next year's projection right now, I know that you had mentioned something about 2025 being a possibility of interest rates doing their thing. Um, you would say just don't stop being so fearful. It's
I
it's
yes.
it's hard. It's a little bit tough. I mean, even for realtors and you and I alike in similar sectors, it's everybody's just waiting. I keep hearing, I'm waiting for the market to crash. I'm waiting for that to happen. Um,
I don't think we're going to see a crash here. There's too many people still moving in, still buying.
mm,
I think other areas, yes, they might see a crash, but I don't think that we're going to be one of them.
mm-hmm.
We still have, we still have people coming here. We still have
Right.
people buying and selling. Um, it's the market's shifting a little bit. You got a little bit
Sure.
more negotiation going into offers and things like that, but I don't think we're going to see that crash. I think they'll be waiting a long time. I
Hmm.
honestly feel like, if you want to buy, then you need to just buy.
Right.
Um, because if you, like I said before, if you look at the cost of rent, I mean, your payment's going to be around the same.
Yeah.
Um, and that's always been what we've preached, no matter what the rates are.
Yeah,
Your
that's true.
rent goes on par of what a mortgage is. Your investor that owns that house, their mortgage
Hmm.
is around the same that they're charging rent for right now if it's a recent buy, and then others that already own the homes, of course, are just going to go with the market
Right.
on where they're charging. So it's always I think it's always a great time to invest in yourself.
So you'll have people that might see this and they're renters. And I know a lot of times people are in a rental situation because they might have bad credit score, they might have a lot of debt that they have to work through, that sort of thing. Um, what is your recommendation to somebody that has the dream of owning a home? Is that something that they can still come and see you, and maybe you can tell them, hey, these are the areas that need to be worked on, or what kind of things do you guys offer, as far as somebody that's looking to maybe 5 year down the road having that be a goal?
So my advice would be call me. Let's talk about it. Let's figure
Mm,
out what your goals are. Submit an application. Let me take a look at everything as a whole because I am trained in credit and I also have a system I can run through our credit report
mm,
agency that I can play around with and say, if we pay this off or if we open one credit card, it'll tell me in a time frame what I can help them repair their scores to. So if they are serious and want to, achieve homeownership, I can
mhm.
help them on their journey. The only thing that would hold them back is just not starting the process. You always have to take that first step, and whether it's today or 5 years from now, let's figure out what that journey is for you.
I love it. I love it. And that's really hopeful, I think that that's wonderful to hear, because you have so many people that have kind of sidelined themselves because they really don't see how to take that first step. But that's key, I think, whether they do it
It's
now
taking the first step.
or doing it 5 years from now, time is still going to pass you by. So,
Hmm.
yes, yes, I really appreciate that. And let me think. The last point that I kind of wanted to touch on was new construction. So, tell me a little bit about that, because I know that there's a lot of brokerages that are not members, right? That are not considered to be affiliate lenders, with new construction. So, where are you seeing? I was seeing a report about the resale market being slower, and newer construction, they've been able to catch up. So we're kind of starting to see a resurgence there. They seem to be winning the marks for a lot of new buyers.
So yeah, new construction has been a big takeover of what
Hmm.
I'm seeing in contracts too. Um, so not construction loans on that aspect of it.
Mm.
I don't offer construction loans here at guaranteed rate. It's just
Can
not
you
a
can you
product
explain
that I
that?
feel like
Can you explain what a
a new
construction loan
construction
is?
loan.
Yeah.
Okay, a construction loan would be you go to the builder and you have them build a house on your land. A construction to perm loan would be your initial side of it would be the paying for the construction of the house, and after the house is done, you basically go to another closing and do your permanent mortgage. Now there
Okay.
are programs where you can do a one-time close where it all closes at one time and then once the house is complete, that's when you start making your payments. So there's different programs that you can do. Again, not my expertise,
Sure, sure.
but just because you're buying a new construction house doesn't mean that you need a construction loan.
Mm,
So a lot of builders are building houses themselves. They are fronting the construction. They're covering the cost to build the house, and then they sell it later.
right.
So that's also a big market. I actually am seeing more of that, and I do get calls about construction loans, just not as much as I do just somebody wanting to buy a new construction house from a builder.
Okay.
And I think that the big increase in that aspect of it is the fact that it's a brand new house and insurance is really a lot easier to get. We are having a lot of insurance changes in Florida, and I think that's a big factor. And
Yeah.
the cost of it. A lot of these resale houses are the same amount for a brand new house. So when you're looking at that aspect of things, for a first time home buyer, if, for anything, they're going to probably go towards the new construction because it's less maintenance for them. They're going to get a little
Right.
bit of a warranty and they
Mm-hmm.
don't have to stress as much, especially when you're going from renting to owning and you don't have that landlord to call anymore. That's a big thing for somebody.
Mm,
As well as if somebody's coming here to retire, this is their retirement home. They don't want to have maintenance and all of that. They want to be able to be in their house.
mm-hmm.
So I think that's the biggest factor. But I also have been seeing a lot of resale homes lowering their price points a little bit. Not huge drops, just,
Mm-hmm.
a few thousand here and there.
Right.
And I think that that is more of the listing agent. I feel like went in and told them this is where you should list your house, but they wanted to list it higher. So
Mm,
they do with them. And then, it sits there and they're like, okay, are you ready to list it for where I told you it should be? And that's where we're seeing those reductions a little bit more
sure.
because they see these new construction selling and they think their house should be sold for the same amount when really you should give a little bit there.
That's true. And there's a lot of incentives now with new construction,
Mhm.
especially when it comes to, the interest rates, when it comes to, like you mentioned, insurance rates. Insurance, that'll be another, I'll have an insurance person on here talking about that because that
You
alone
should.
is, whew, that is a
Yes.
zany sort of world. um,
Yes, definitely.
yeah, but tell me, as far as new construction is concerned, when you're working as a preferred lender with a new construction company, are you able to? I know that some builders like to offer, a percentage towards closing costs and that sort of thing. So how does that work in your realm?
So I am a preferred lender with a few builders here in the community, working on getting on a few more lists as well.
Mm-hmm.
Some of them do offer incentives for using their preferred lender. They will give you closing cost incentives for doing so.
Mm-hmm.
Others do not. So it just depends on the builder.
Mm-hmm.
But when you're working with one of the preferred lenders, with somebody, that lender knows their processes with the builder. They've
Mm,
done this before. It helps make a smooth closing happen. So a lot of those things are why these builders want you to use their preferred lenders because they know that the process will go smoothly. Whether there's delay in construction or things like
hmm,
that, they know that that lender can handle anything that's thrown at them. And a great thing about with guaranteed rate is I have the ability to lock someone's rate in for up to 12 months. But then I also, and not just on my extended rate lock,
mm-hmm.
I on any rate lock, whether I get a contract in and we're closed in 30 days or I lock them in for 12 months, I can do a one-time float down for somebody if rates go down after I lock them in. So they're
Oh wow.
secure that if rates go up, their rates is staying the same. But if rates go down, I can still drop it one time before closing.
No way. That's massive. That's also a really great point because
Yeah.
I know there's a while there that the rates were doing this. I know that
Yes.
that's, I mean, it could really throw someone off if they're at the top of their, of their price point. So the
Exactly.
fact that you can do, okay, so normally when you're locking in a rate, you wait generally until what point in the loan process? So a person
Um,
comes in, we have a contract, we do the inspection, everything's good to go, let's say. perfect world, and then you order the appraisal. So at what point? I know a lot of lenders tend to, lock it in kind of when the appraisal kind of is happening, or where are you at when it comes to that?
I try to lock them in the day I get their contract.
Really?
Yeah, when I get that contract and I get their file structured
Mm-hmm.
to fit for the house and everything, we're talking about locking your rate in that day. Some people lock it, some people decide they want to wait. It's
Mm.
fine. That's the choice of the borrower. I talk about the risks of all of it and let them
Okay.
know, hey, if we lock it in and they go down, I can still lower things like that.
Right.
It also depends on the point of where the contract is. So, the shorter the lock, the less cost it is
Mm-hmm.
for the rate and things like that. So, looking at those points, if I'm
Mm.
locking someone in for 30 days versus 60 days, the cost may not make sense. And we're going to talk about that too.
Mm-hmm.
Um, so really it just like I said, I try to lock them as soon as possible because the market's so volatile right now. We just don't know what is happening
Right.
all the time.
Okay. But that's wonderful for people to know that they at least have a little bit of a semblance of power when it comes to deciding,
Yeah.
because it really is tricky. It is tricky. And I've
Mhm.
unfortunately, had people that they're like, man, it just overnight went up, and they're like, oh
Yep.
man, we didn't lock in. And that's mortgage money. That's money for other things that now you're going
Right.
towards a lender. So yes, oh, that's really good for people to know. I think that right now, as far as overall, with what we're seeing with the market, with the end of the year coming around, a lot of people are starting to make their moves, last minute moves, to be able to get some of that, whether it's taxes that they need to spend on properties and that sort of thing. They rather it be a new investment than give it to Uncle Sam. So, Deanna, can you go ahead and tell us how can they get in touch with you?
So you can contact me by calling or texting to 352-496-1883.
Mm-hmm.
You can also shoot me an email. My email address is deanna.chosewood@rate.com. You can contact me on my website. I have access to a mobile app now, which is really cool for
Yay!
people to apply
That's
on.
great.
You can actually upload documents for the loan process through the mobile app by taking
Wow.
pictures, and it's super cool. So
Yes.
lots of ways to get in touch with me. I
Okay.
have a Facebook page as well that they can message me on, so I can send over all of my information so you can
Perfect.
share it in the comments.
Okay. I really appreciate your time. And, of course, you guys know how to get in touch with Miss Tiana. And I know that I have the camera here. It's kind of a weird thing. I'm looking at you, but the camera is there. But I really appreciate just all of your wisdom when it comes to, I've worked with you before with past buyers, and, they've been absolutely pleased working with you. And you could tell that you're passionate about what you do. So I'm grateful to have you on my team. And also, you forgot to mention that you are local, right?
I am. I
That's a
am
big one.
local.
That's a big
Yes,
one, you know?
local in Ocala. I have a
Hmm.
local branch. So I am more than happy to meet clients at the office. I work from home most days, which is
Hmm.
awesome because I have a
Yes.
3-year-old, so I get to see him running around.
Oh,
Um, but I do go to the office all the time, in and out events, seeing you there as well.
yes.
So local here in Ocala, I am with you from start to finish. I even go to the closings with you to make sure things go smoothly.
I could attest to that. Yes, it's pretty cool. It's great to have you there, and the buyers are always excited to see you because you really have, done a great job and been able to walk them through really the largest investment that most people make in their lives. So it's a
Yes,
big deal. So thank you
it
so
definitely is.
much. All right. All right, my dear. Well, off to the next event. I think I'll see you probably very soon, right?
Yes, ma'am. Probably
So,
next week, I think.
yes, next week. That's right.
Yes.
So, thank you so much for your time, and I'm sure that we will see each other again very soon. So,
Thanks for having me.
all right, have a good day.
You too.
All right, bye.
Bye.